And we have your views here, which are, dare I say, optimistic. So you're actually think the environment is constructive for asset prices, and not just for asset prices, but for risk assets like stocks. Is that fair?
That is fair.
So tell me about that.
Well, let's start with the first thing that you said, and I know this is the Contrarian Podcast. You're dealing with a scenario that when it's contrarian to be positive, think about the fact that, I don't know, stocks are up 80% of the years and a fairly high number of the quarters. So when you're starting from a perspective that most people are negative, to me, that's always an opportunity to look at more closely at what's happening. And the way that I equate it is, when people get this bearish, it's kind of like people start talking about who's going to win a football game without looking at the spread. A lot of the stuff that people are negative about has been going on for some time. And last year, my focus was completely on inflation, really, for the last 2 years. And now I think inflation, which has been a driving factor behind most of the weakness in assets and the movement in the central bank, has left us in a position where not only are allocators extremely negative, but something else I use for a lot of my decision making, since we manage a hedge fund here, is what's happening with hedge fund leverage. And hedge fund leverage is down in very, very low levels. So you have allocators underweight stocks, and you have hedge funds with very low leverage, and that just sets up a situation where someone's favored by 17 points, and I kind of like the underdog here.